Thanks very much for having me. I should first of all confess that Craig has given me the additional job of making sure you're not a full 40 minutes late for lunch. So if I go very, very quickly, you'll understand why I go very, very quickly. My job here is to introduce the concept of securitization of real-world assets on the blockchain. There are several more talks on this topic, so we'll dive in deeper and deeper over the course of the conference. My job is to kind of get the conversation started and answer one fundamental question, which is why would you bother to do this at all if you're the owner of an asset? And we'll talk a little about what kind of asset we're talking about here. I'll very quickly kind of talk about what tokenization is and just make sure that we're level set and talking about the same thing. Talk a little about the benefits. It's impossible as a former consultant to talk about benefits without talking about risks, so we'll talk about that next. And I'll summarize it for you in the end, and hopefully we'll do all that in about 10 or 12 minutes. So what is tokenization? I need to start with a little caveat. You need to understand who's talking at you here. We are a venture capital investor and a builder of technology. We're not a licensed broker-dealer. We don't actually issue tokens. We don't do these things, but we support the people that do. And the amount of regulation is different for different asset classes. We're a provider of technology, and the purpose of our technology is to support a whole variety of different asset classes and have them be tokenized, as I'm going to describe for you. So the first thing I need to do is to talk about this very, very weird thing that we've invented as human beings. It's this concept of ownership. Out in the natural world, the non-human world, we have this thing called possession. Possession is a very simple thing. You have control of something or you don't. We invented as humans this thing called ownership, and ownership requires documentation because ownership means that you have a right to something that you may not even possess at that moment. You may not have it in your hand, but you still have a right to it. That requires documentation, and that causes some problems, and it's caused some problems for a very long time. We can go back thousands and thousands of years to the Sumerians. The Sumerian king wanted to understand that he had to remain king, and that means he had to tax his subjects and get some agricultural products in at the end of the year. He had scribes, and those scribes invented this absolutely magical thing called writing on these Sumerian clay tablets where they recorded who was farming what, how much was expected, and how much was going to be owed to the king at the end of the year. So when the harvest came in, the king got his share and everyone else got their share. Let's fast forward a few thousand years to about 1668. A couple of French coureurs de bois ran afoul of their handlers in Quebec because they imagined this, went to trap and trade where the fur was rather than where they were licensed. So when they were thrown in jail and eventually let out, they went to their arch enemies, the English. The English put together a venture around a ship called the Nonsuch. Any Winnipeggers in the room? If you're a Winnipegger, you know where the reproduction of this ship is. It's in the Manitoba Museum. You can go see it. After a year-and-a-half journey, that ship returned laden to the gills with very expensive beaver pelts. And they had to figure out who now that had invested in the thing was going to get what share of those beaver pelts. What they used was the ledger, a piece of paper that says these are the people, these are what they put in, and this is what they get out. This all went so well that they had a big party and formed the Hudson's Bay Company a couple of years later. As you know, Hudson's Bay is still around. This continues today right here in Vancouver. You may want to put up a funny-looking but very attractive building down the street. You may want to put together a REIT, a real estate investment trust, in order to fund that. You've got to give people certificates, a sense of ownership. You've got to keep records, either in a filing cabinet or a hard drive or both. You have to deal with the appropriate regulators to make sure you're following the rules to protect your investors. When the building is done, you can use that information to pay people their share of the proceeds of the venture. All these things are examples of securitization. Securitization is basically taking a good that's inconvenient to possess and still allow that ownership of that good to be dispersed amongst, for instance, investors. But there are other possibilities as well. So my question to you is, in the 4,000 years that we've been doing this in these examples, have we really innovated very much? I submit that we haven't. There's not that much difference between that clay tablet and that paper ledger, that filing cabinet, and that hard drive. If anyone's had a hard drive failure or an office break-in or an office fire, you know the limitations of some of the technology on the right-hand side. The fact of the matter is that just in the time that this conference has been running, some new technology has come along that promises to fundamentally change and innovate around how we record ownership and how we deal with the owners of items, and specifically in the case of tokenization and securitization, investors in those assets. So what blockchain does, or what blockchain promises to do, is to make it possible to record that ownership in a decentralized fashion, rather than in a single place, in a single point in time, with all the points of failure that come with that. So there are some potential benefits for doing that, and I'm going to point out a bunch of them here, and then I'll talk about some risks as well. First of all, it's a very expensive business to keep track of investors. It's expensive for everyone. It's expensive for the regulator, who has to support their rights. It's expensive for the asset owner, who is responsible for keeping track of who owns what. It's very, very difficult. If you can increase granularity, which means reduce investment sizes and increase the number of potential secondary transactions that can occur, then you can make these types of investments available to a smaller investor, which generally means a larger number of investors. That can be very interesting if you're the poor sod who has to raise money for the real estate venture down the street. In Vancouver, that may not be too hard. In other places and with other asset classes, that is very difficult. Second of all, if you can promise your investor increased liquidity, that you'll be able to trade this in for cash more easily and more often and perhaps sooner if the regulation allows, that is an important benefit. That then potentially results in more velocity, so more trading than might occur if the whole thing was on paper and it took weeks to do a simple trade. You could do it instantly with technology. Another set of three, if you can go international, for example, if the regulations for your asset class allow that, and you can get and attract investors in other jurisdictions, that may not be possible right now, especially because the investment level is potentially smaller, then that dramatically increases the number of investors available and makes investments available to people who might not otherwise have it available. That speaks to financial inclusion, which I think is a topic that came up a couple of times today already. Thirdly, on this page, increased transparency. The neat thing about blockchain is that you can control what information is visible to everyone and what information is partly private and what is completely private. That allows anyone at any point, for instance, to know how many shares of a particular token or security issue have been issued. How many are out there? That's very, very clear. It's recorded in technology and everyone can see it. You don't need to take the word of the company or a regulatory filing to determine what that number is. That's really important around this thing called dilution. If you're an investor, you understand what that means. And the last thing is obviously the concept of having the data stored in many places and be replicated, but kept in sync, which is what the blockchain promises to do for us. It allows us to not incur the pain and cost of centralization. No fire, no single break-in, none of these things are going to hurt us in a way that they do right now in many cases. So let me summarize potential benefit number one. If you took Economics 101 in university, you'll recognize that all those six things I pointed out put upward pressure on the value of that asset that you're securitizing. So for the first time, because the Sumerian tablet didn't do it, and I submit that the hard drive didn't do it either, we're using an administration technology that may actually encourage upward pressure on the prices and the value of the assets we're securitizing. That's the promise. In some cases, maybe we'll see it. In some cases, maybe we won't. There's also some additional benefits. You need to manage that increased number of smaller investors. And that's a very, very expensive and difficult thing to do right now, especially with some of the regulatory regimes we have in place. If you're going to do that, you're going to need some technological help. And this technology can give you some of that help. We want to make ownership records persistent, which means if one of the organizations or even the individuals that was involved disappears, goes out of business, meets with misfortune, is hit by a turnip truck, we still want to make sure that the record of ownership at that moment in time is absolutely and completely inviolate and can be accessed if necessary. You can't do that after a fire and there's a filing cabinet full of share certificates that blow up. Then there might be a little bit of a fight over who owns what. And lastly, we have our friends, the regulators. They have a very, very difficult job. They need to continue to exist. They need to protect investors, and they need to encourage trade and industry. Those are very, very difficult and mutually sometimes incompatible requirements. This technology provides some significant benefits for them as well in terms of visibility into what's going on in the securitization markets. It's expensive to visit an office and dig through a filing cabinet. Much cheaper to sit down on your computer and see exactly what's going on at any moment. So that can be summarized as potential benefit number 2. The administration of these larger number of investors and these more complex securitization issues potentially becomes easier if you use this technology right. That's despite the fact that we may have many more investors, much more geographically distributed, and those investors may be transacting on a regular basis on their own. So there are some risks that come with this, and I wouldn't want to say that this is easy or assured. It's not. We're in the early goings in the tokenization world, and we're seeing some things that hopefully will be better in the future, but they're things you should be aware of right now. So first of all, we're dealing with very new technology here. This new technology is not just new in terms of lines of code, but it's conceptually new. We're figuring out how to administer and govern this thing. We're figuring out how to deploy it and scale it and so on and so forth, and there are a number of companies here that are involved in that process. Wherever there's new technology, if you haven't learned it by now, you should learn it. Be very, very careful and be aware of what risks you're taking when you use it. Second of all, no question about it, I think we all admit, including our friends the regulators, there's some uncertainty here. We don't really know what the world is going to look like in many jurisdictions, even a couple of years down the road. And that's something that everyone involved in this process needs to take into account. So be very careful, be very conservative, and you might be able to manage that a little better than others. There's provider risk in this space. Wherever there's a hot area, you have folks arriving that want to sell you services and technology and assistance that may not be necessarily qualified or experienced in doing that. That's not unique to blockchain or tokenization. It happens in any new area, so I'll just point out that that risk is there. And lastly, there's always the question of how many investors in the world are prepared to forego the brokerage, forego the third party, and, for instance, hold tokens themselves, or work with a new brand of custodian out there who's starting to emerge who will hold the tokens for them. We don't know how quickly this technology is going to be adopted. Many of us hope it'll be quickly. Many of us fear it may not be so quickly. So there's a potential here for a bunch of things. One, if you choose to take this new approach to securitizing assets that you may be involved with, there is a possibility of lifting the asset values. When you make things more convenient, when you reduce associated costs, there's a chance that that asset is going to be more valuable. Obviously, no one can promise you that, but certainly the economic 101 pressure is there upward. Second of all, you're going to have a substantial regulatory and administrative burden when you increase the number and geographic dispersion of investors. There's some technology here that may be able to help you and allow you to take that step and make it maybe a little easier to raise money for your project. And at the same time, there's a bunch of new potential risks being introduced. You want to be aware of those. Those will change over time, as they have with every other piece of technology and financial concept that we've invented over the past few years. So why would you tokenize a real-world asset? Well, you're going to want to distribute ownership of that asset, and you're going to want to do it with the hope and certainly the target of increasing the value of that asset, which is something that any project owner wants to do. And at the same time, you want to make sure that you're able to administer it, live by the rules of the road, make your investors happy, make your eventual asset purchasers happy, and make the whole thing run as smoothly as possible, and maybe not pick up as many gray hairs as I have raising money over the years. There are a number of companies here that are involved in this space. We at Northmark at the platform level are involved. Vanbex is involved. iComply is here. They're involved. Redium is here on the real estate side. There are many folks at this conference that you can talk with about this thing and have more interesting and detailed conversations, and we invite you to do that at any point in time. Thanks for coming on this little introductory journey with me. I appreciate it.